Welcome to Business Pro Tip Monday. Today I'm talking to women, things you can actually do in order for you to put yourself in a position where you could be financially stable. You're going to notice that I started a brainstorming, my brainstorming for 2021. This is a way that you should kind of do a little mind mapping. I use simple maps in case you've never heard of them before. But simple maps give me an opportunity to kind of lay everything out. We're in the month of January 2024. And you have to ask yourself this question: where is my source of income going to come from? How, from that source of income, what percentage of it is coming from me having to wait, like on an hourly or salary rate? So let's kind of have a little fun. This is a brainstorm. It's a strategy. We like to call it white space. You can kind of go through it. Now, these are all the form of incomes that you can have on a 12-month basis. Now, when I say that, we also will talk about what's the difference between some deferments and some that you actually are not deferred. You want to take the opportunity to be able to just kind of mental map it out. For example, we talk about if you get paid by salary or you get paid by hourly. This salary or hourly is going to come in that play, but we're going to put salary up here. Let's assume the salary is $40,000. Now, let's go even higher. Let's go 60,000. Okay, so we're going to put 60,000 here. Okay, that's one more form of income. Let's say you also do something on the side, you work a part-time job. Let's say that that hourly rate is, let's go for it and say it's $18 an hour. Okay, do I have any real estate? Do you have any real estate income coming in? That should be a question to ask. And if you don't, let's put this, that way we don't go down this category. We're gonna say no real estate income. Okay, so everything underneath this as far as coming in my household right now, that means I'm looking at my current income being specifically from my salary, specifically from my hourly rate. I don't make any real estate income, so there's no here. Well, do I have any stocks? Let's assume that you say yes. Okay, what are we referring to? You say 401k. Okay, now we go here, underneath 401k, we want to write here. That's a deferment. Oops, misspelled deferment. There we go. That's a deferment. So this doesn't count. This is not income. This is later income. Oops. Come on, let's fix this word here. That's the benefit of doing things in real time. You can laugh at me later. Right now, we're gonna have a little fun. So deferment. So automatically, this is deferment. We're gonna make this area. We're gonna turn this area red. It's not active income. That's why we're going to do this. You say, well, I have a personal IRA. Let's put this here. So you have an IRA, okay, from your financial advisor. We're going to make this. I'm going to type the word in here. Deferment. I'm going to make this go red. Okay, so this is not part of your income. These are deferments. We go here, we say, well, I have a broker's account. So you say you got a broker's account. Now you got a broker's account. All right, we're going to make this level here. Let's change these boxes. I'm going to make these green, considering that you do get income from them. It's active income. I'm going to make that to be green. I'm going to make this to be green. So these are the things you make. We say active broker's account. We're going to make this to be green. Now, if you do have an active broker account, you do not want to make this a deferment. So this means that if you have an active broker's account, this either needs to be dividend income, beneath here. This either needs to be deferred income, or it needs to be receiving income from swing trading. You may say, what does this means? That's buying low, selling high, or selling high, buying low. So these are all incomes, and then you would need to put your income there. Let's say you get dividends of annually of $600 a year. So you got some preferred shares, and you may be getting preferred shares are considered debt. Seek a financial advisor or a licensed representative to have better understanding of this. Swing trading is, let's say in swing trading, you actually have, swing trading is you hold these stocks anywhere from 9:30. It can be even, so this is over a day. So this is over a day, less than 23. So it's not quite 2 years. Okay, let's say your swing trading is less than a day. Well, let's make it in, let's say 12 months. That way we keep it in each tax year, so we keep it your income. Let's assume from that you're making $3,800. Okay, so now we have a couple things here. We see that you have your salary. Set this to be green. You have your salary, you have your hourly. Then from that, you make 60,000, you make $18 an hour. And let's say this part-time job as well, on this $18 an hour brings you in an additional 12,000. I'm going to kind of move this around here. The $18 make an additional 12,000. So that means your total combined income, let's go here and here. If we're going to look at it on this side of the equation, and we're saying, when I say this side of the equation, is this side here. I was waving at the screen like you can see that, but it's this side here. You're making $72K a year. This $72,000 a year, which is coming from a combination of this and this income. This is your yearly income. So we'll put this here. This is your yearly income. This is all of it. This is your yearly income. It comes from these combinations, come from your salary. That's what makes up this number, and from your part-time job here. This part-time job you have, that makes up 72. So you're already working 2 jobs now. Now these 2 jobs are going to be what we like to call when you're getting paid by the salary or through a paycheck. They're going to be progressive, which means you need to talk to your CPA, your accountant, whoever does your taxes, to explain what progressive means. But for the sake of this demonstration, you want to look at progressive means the more you make, the higher your tax bracket goes. Now, you also make in consideration $600 from dividends. So this is part of your income here. You also make $1,200 from preferred stock. Then you also make $3,800 from, again, you have these things here. From your dividends, preferred stock, your swing trades. That's in swing trading consists of buying a stock for $1, selling it at $5, buying a stock for $5, selling at $20, or selling a stock at $24 and buying it back at $5. Again, both ways, there's a sell, there's a buy, and there's income come from it. But these two are here coming on in a 12-month basis. They either paid on the dividends, either quarterly, monthly, quarterly, semi-annually, annually. So when you take these things into consideration and we create this other box, we're asking ourselves this question: how much of our income, which we see here, comes from sources of non-labor, which means I'm taking this 72 and allowing it to help me make income, which I'm either not getting paid a salary, so it's not that physical, it's intellectual, and I'm doing the per hourly rate. How much of my income? Well, if we take this scenario here, we combine everything that we see on the screen, we're going to come up with a number. And this number we want to improve on in 2024. So we started off this brainstorm pretty much saying that, okay, I have coming in on non-labor income. So this is non-labor. Non-labor income, have an additional $5,600 coming in. Okay. So this is non-labor. And this is coming, so now I can do this here. This is why I love brain mapping or simple maps for this reason here, because it allows me to really brainstorm and see really where I'm at financially and ask myself this question: how much of this 72,000 now am I going to take to increase this column here, this 56,000? Because my total income, when I now do it, when I combine my 72,000 plus I take, which is also from non-labor, is 83,000 a year. So now I'll hit this and I'll go here, and my total income from all sources comes out to be 83,200. This also tells me, and that's the difference between my income, which is my salary, my part-time job. Now, I can actually give up my part-time job in this scenario, so we use as an example, once I hit utilizing 72,000 to increase it to be that much, especially, and the reason I said this is because what ends up happening a lot of times is if you're using $72,000 of income, this is labor income, that labor side of that income, you get used to. It's almost becomes like it's part of what you do in order to meet your overall goals. So this is going to be hard for you to break away unless you got something to replace it. And that's what this income comes into play, because we started off in 2024 with, my brainstorming 2020 financial strategy. I don't have any real estate, so that's not part of my portfolio. And this is not a stat document. This is literally a brainstorm. So this is not based on any material facts at this point. We just use this for each person to kind of take a sit down at your financials and ask yourself this question: where is your income coming from, and where do I need to improve it, where I'm going to be receiving income this year that's not coming in from a labor? So this year in this 72, do I incorporate real estate into the overall transaction? If I do, how much labor would it cause me to have to go out and do for my brainstorm? But at this particular point, I did some things that are non-labor, and that is stockbroker's account. Now, let's say in your 401k, because people ask this question, in 401k, remember the 401k is considered a deferment. Let's say you have 100k in there. Okay, not a question. You got 100,000 in there. This year, so we got 100,000 in the 401k. It's considered a deferment. Okay, so that's that deferment. Okay, you now have this IRA, personal IRA. Let's assume out of that personal IRA you have 30,000 in there. Okay, so again, there's another deferment. So you have a total now, this whole category, you have a total of 130,000 that does not cover anything. Now this is going to be taxed out of, because there's no taxes taken out. This is after that. So this is your net after tax, these two numbers here. This is what your income a year is. And I'm going to just make this statement, this, for the sake of this, since we're doing this, let's say this is your total income, not your net. This is your total income, 72,000. From your total income of 72,000, at this particular point, you got 60,000 and 12,000. From the 60,000 to 12,000, that gives you 72,000. You took that 72,000, and this is after, but prior to that, you already been working at your job. You're paying to your 401k regularly every 2 weeks or every week, however you get paid, you pay that. Your IRA comes up from your check on a savings account. This money is drafted. Now, the only income that actually increases your income that's usable is going to be this income here, the income that you have from your personal broker's account. You do have another broker's account. That's your 401k account and your IRA, which is managed by someone else, but you didn't get dividends, preferred stock, and swing trading. And swing trading classified is, actually, let's do it this way. This is anything over 1 day. So swing trading consists of not holding the stock over 24 hours and less than 12 months, because we're looking at what you make per year. And let's say in swing trading, you made $3,800 from your preferred stock dividends. You anticipate it. You can see it for the year. You bought these positions in 2023. So at the end of 2023, you made 3,800. This number here is not going to stay then, because swing trading is an activity you have to do, but this will stay. So just keep this in mind. So this $1,800 will. So for this year, this can be more or less each year, just so you know, depending upon your activity to it on days that you have off where you can enter the market, because here you have someone managing it for you, but this year you don't. So you're going to be entering the market. Now that's 3,800, that's 83,200. Now the reason this is important because the question is going to always be the same. How will I be improving on this income? Because if I'm improving here, which is a deferment, this deferment means that it's for later. So I covered my later. I have some income now, and I do have income now. You'll say to yourself, okay, well, if we take this 83 and we take this 8,300 and we want to divide this over, well, let's take 26 weeks. It makes it easier. That means it's 3,200 times 26. Yeah, because it's 26 weeks. That's $3,200 times 2. Make sure I get this right. So if we do this correctly, let's make it even easier. 26 weeks means you get paid every 2 weeks. It'll literally come out to be this amount. So we do this by 26 weeks. We will get back 3,200, as I mentioned before. I was going to change up. I thought about something in case people don't get paid that way, but it's okay. So here's this 3,200. This is based on a combined income of the 72 plus the 56 is 3,200. I'm going to make this yellow. Okay. The reason I want to make this yellow because what we notice is that if you were to have a problem at your job and you had to take some, and you say, well, I ran into a situation and I'm short. Well, what we notice is that you have more than enough with this non-labor here. Again, this money comes into play. You have more than enough you're growing it here, but if you grow these dividends, so after 3,200, I'm going to put this here so you can see what you're short at. If this is me and I'm doing a brainstorm and I'm deducting, I know the 3,800 that came from activity. If I'm only going to base it in 2024 based on that activity from my decisions that I made before, that's $1,800. So that meant I am $1,400 short in all actuality of being able to get, in this example here, I'm just taking the third. See this 38, this is 1,800. So let me actually do that because you have this 38 is not going to be there, but this is the money that I would need to cover my expenses. I have 1,800 between these two numbers is 1,800, and that $1,800 that I'm not getting, that's $1,400 negative. So if I don't do swing trading, I'm $1,400 negative. So now in 2024, I got to say, what am I going to do with this money to improve on this here? Because that's 1 month. That's 20, it's 26, that's one pay period. If you think of it in that regards, you get paid 26 times a year, 3,200 every 2 weeks. That's how it will play out to be. Well, I have enough from this 5,600 combined right now that I have 1 month set aside that if something came up, I don't have to pull from my 401k. I don't have to go into debt and use my credit card. I don't have to go get a signature loan. I'm doing these things. How come? Because I'm using my income, which brings up, it's $1,800. Most people don't base their finances on taking from these two sources of income, the dividends, preferred, or even growing them or swing trading to cover their debt. They don't take their pay and then immediately move into an asset. Because remember, if you're going to have a car note, now let's just say, put this in perspective here. Let's go here and let's say you have an apartment. So you live in an apartment. And as you live in an apartment, the rent that you pay a month is depending on where you at. Let's just put it this again, it depends on where you are. I'm gonna base it on the state of Nebraska. Let's assume you're paying every bit in an apartment about let's say 1,900. There's certain apartments that's around 1,800s, 2 bedrooms to up 3 bedrooms would be a little bit more. So this is now this is your debt category. Okay, so you got to pay this apartment. You know right now that you have to in 2024, if you're going to look at it this way from this brainstorm, is this. I make $72,000 a year. I get an extra 1,800 plus this 3,800 from last year. But if I don't do anything else, I'm gonna get $1,800. I'm $100 short. So I know no matter what takes place, I have to increase my dividend category and my preferred income category I'm automatically going to do every 2 weeks my 401k because it's going to come out deducted automatically. I have it set up on a Roth IRA. Well, $30,000 is already in my Roth IRA. Again, I didn't put what that deduction is in there as far as how much you pay every month into your IRA. But you may want to, talk to your financial advisor and ask him, okay, look, I noticed that this is a deferment. I want to increase my income. What you may not know is that the dividends, the preferred shares, and the swing trading is actually not a progressive tax. Not like that. And again, then you talk to your accountant, your CPA, because dividends, if you hold them over 12 months, the max you would even pay is 10% tax on that. So $600, you pay $60 in federal taxes. On your preferred shares, depending upon how that, if that is a dividend or a ordinary dividend, then that actually be taxed the same way your personal income is. And then you have this 3,800. No matter what takes place, if you hold it over a year on that swing trading, you're looking at 10%. If you have it less than that, it's 20%. So just keep that in mind. So those taxes don't change. I mean, your dividend will be taxed in that regards. What will be progressive, though, is this income here keeps going up. And you combine these incomes, it can go into the progressive category. But your goal really is to be able to take your non-labor income and bring it up to your decisions over the course of 2024 that you increase this. And what's one of the ways? Right now, we know that you have around $1,800, and that $1,800 will help you financially, especially if you're female. It will help you financially, saying that if you were ever in a position where you could not, you actually have an asset that's $100 away. So what are you going to do this year in 2024 with the 60 plus the 12? Will you take some of this 38 to increase it? So let's go here. Let's say, so we'll hit this button here. So let's assume, the dividend, that you increase this dividend by an additional $250 this year alone. Okay, so this is 2024. So this is so we're going to put this 600. This was in 2023. This was now in 2024. This now is in, oops, come back here. This is in 2024. So you improved it here. It's 2023, 2024. You improved it. Everything stays the same. Let's say that this actually improved as well. So you actually did, let's say you actually did less. So you did 2,000. We're going to see that there's a breakdown here. Okay, so you got 2,000 that you did. Well, automatically this is going to go down because you were making 56. And what took place is that you now have an additional, let's just take it in consideration. You have 600 plus the 250 now that you get in dividends. That's $850. You still get your 1,200 from your preferred shares, stayed in place, nothing changed. And then you also did $2,000 in swing trading because you did less activity by choice. You just did less activity. You had some things you went on, you was comfortable, you was excited because you got the 250. So actually, let me do this. Let me go back one. Undo edit. 56. We're going to now hit this out. And we want to now look at the non-labor income for this year being, we go 4,050. So this is your non-labor income in 2024. You went from 56, you did drop down, guys, here. You're down about $1,550 down from, but at the same time, you also went up. You covered this difference. When we're talking about this apartment here, you went up and you now have the 850 coming in plus the 1,200 coming in. So 850 plus the 12. So now really from your paycheck, if you do it right, And this is consistent where this concept right now is void. Let me just be very clear. It's void. You have an apartment that you have to pay, and that apartment you have to pay is 12 months. What you will get if the dividends and the preferred stock is quarterly, then that means that you would have quarterly $2,050. And we can now take this 1,200 plus this 850, this 2,000 here, and we know that you only have to pay now. When we take this number, you have, we put this here. So this is coming in, $2,050 is coming in from your paper assets. So out of your paycheck now, $2,050 comes, and it comes 4 times. So you now have 8 more months. You are short 8 months. You're short 8 months. You have 8 months where you have to pay the apartment yourself, and 4 months where your asset pays it. So we're going to put this to be this. Let me see it here. And you have $1,900 you pay 4 times a year. You'll get a debrief, and you will be able to say that from your paycheck. Now, nothing's changing your pay up here. What's changing is actually down here in this category in your stock portfolio. We didn't add anything in 2024. However, we did in your stock portfolio, you increased your 401k, you increased your IRA contributions with your financial advisors, your job, and then your personal financial advisor. You also have a broker's account here for income to increase your $72,000 a year by using money as leverage, which gives a total income now of 83. And in your first year, you end up making 83. Now, your second, you're going to make a little bit less. We need to take off of that because you made 4,050. However, you do have improvement. You have improvement in your dividend category. Now, this is like a job. The reason I said swing trading is like a job because it's an activity that you must do. These are activities, dividends and preferred income, which is not an activity that you do at once. And if you do it the first time, you're actually now going to receive that income until you exit the position or something happens dramatically in the company and it stops paying. But if it's not the latter, then you can expect to see that your dividends will increase. So in 2024, you increased it by $250. My question would be, if you're a lady, you're a woman out there, you listening, how come you didn't push this? If you pushed it to $600, you should go to push it to $600 or better. You should beat the previous year when it comes to your money, because if you did that, you can actually now see that you're getting very close to this. Pays every quarter. You're getting that money every quarter. And as we talked about it before, that is $2,050. That's between the dividend that you got in 2023. On top of that, you get an additional $250. And you're getting the preferred shares getting compensated and less activity you did the year before with 2,000 versus 3,800, but you still would see every 4 months. So you think of it in this regards, March, you'll see it in January, February, March. So it'd be March, you got April, you got June, you got September, you got December. Those are the 4 times you'll see this 2,050. If something comes up and you get past now we're in the second year. If something comes up, you got 4 months of at least your roof over your head taken care of. You don't have to liquidate your future money for your retirement. You don't have to do any 401k money. You wouldn't have to borrow from a loan because your money is actually working as if, even if you are not if you're not married, you don't have a boyfriend, your money is actually working with you at this point. And it's showing you that you are in a good position. You got 8 more months of utilizing your money the correct way, and you'll end up having 12 months, and you now are just 8 months away from having, if you do it again the following year, you have now, you'll end up with 4 months left. If you do it over, so the course from 2023 to 2024, 2025, by 2026, even if you're not in an apartment, even with a raise, let's say if you stay in an apartment for 4 years and they increase the rent by 3 or between 1% to 3% each year, no matter what takes place in 4 years, you're done paying for rent from your labor at that particular point, because you have now covered your home expenses with your dividends and your preferred stocks. Swing trade gives you the opportunity to have that income, just like you have from this income, your 60 and your 12. And you're now getting closer because remember, this is $12,000. If you're getting $2,050, you're very close to by the fifth year. It depends upon what you want to do with your money. Is there other opportunities? Well, for today's brainstorming, this is just helping you in business pro tips as you're a female to kind of think about it. And if you didn't see it, go back and watch it all over again. You'll notice that we started off with brainstorming. We started off with looking at your salary, then your per hour, and then we begin to make these connections. And then we got to a year income. We realized you didn't have any real estate. If you had real estate, that real estate number would come over to here and you'll be able to say, but right now, no real estate income, not a dime coming. So it doesn't help your portfolio. But that's something that you have to make a decision saying, well, you know what? I think I want to add real estate to my portfolio. So you go get those skills. When you go get those skills, and then you begin to write, is it going to be in the real estate? Would it be single family, duplex, or apartment complexes? Whatever that's going to come in to be, then as it stands right now, there's no real estate income. So you don't have any in this category, but you have the opportunity to improve in these. A lot of times what ends up happening for most of us who were not taught to brainstorm in this way, to ask, how do I increase these categories from here where I'm increasing my income in a 12-month basis? The reality is we do labor income, which is the highest income bracket that's known to the IRS, which is your salary per your hour. Again, talk to your accountant, CPA, or whoever does your personal taxes. They'll let you know it's a progressive system. These are actually the cheapest incomes that you can possibly have, including the real estate. These are the cheapest. And the reason for that is that these are not based on the progressive tax code of earn a money. They're on a position where you're not part of the system and you say, what do I mean by part of the system? Well, whenever you're doing anything that you use your own money for, that means after tax dollars you're using to generate more money, the IRS, again, talk to your accountant and your CPA or whoever does your taxes, will let you know that they tax you less. Dividends are taxed at 10%. If you all have them more than 5 to 10 years, they can be taxed at 5%, same stock. Your preferred shares, if it's a dividend, 10%. If it's an ordinary share, it's taxed the same as ordinary shares means it's no different than getting paycheck by the hour or by salary. Just in case you know, again, you can look that up, talk to your CPA or accountant for that. And then you got the swing trading. No matter what, if you hold it less than 12 months, you're looking at seeing a 20% tax. If you hold it less than 12 months, it's 20% tax. If you hold it longer than 12 months, it's actually a less tax. So this is where you can actually control, and it's just fixed at that rate. It's not getting higher. It's not going to get lower. It's the way that it's designed to be, and it allows you to be able to take a step back and say, let me brainstorm. The goal, no matter what's taking place, is whether it's your apartment here or it's a car payment, or whether it's a car payment. Your goal is to get in 2024 these items covered by things that's not based on your labor. Because once it's not based on your labor, then you can't lose it. That's the tip for today. I hope you guys enjoy. You can go back, rewind. You can see how I kind of did it. I did use, I used in 2024 for my financial strategy. This helps me kind of brainstorm and answer myself these questions. Most of us look at it when you get your paycheck, you say to yourself, what am I use the money for? What I do is I say, what can I use the money to improve so that's something I don't got to buy? If you're a female, you say, I want to buy makeup, but what is it, $30? What can I buy that will pay me $30? Your answer may be, well, I'm gonna go to the store and I'm gonna buy this shirt and I'm gonna resell it. Again, that's going more into like a swing trade. That means that you're actually going to be increasing the category here of labor income. But what if I want to go into a lesser rate? Well, how do I get a dividend? What would I have to buy so that if I wanted to pay $30 for makeup, I'll be able to buy makeup every 3 months, especially if makeup is your thing. If your nails cost $50, what do I have to buy that will pay 50? And how much? My first goal is to say, well, okay, well, if I spend $500 or $2,000, I would never, at least 4 times a year, I'll be able to get my fingernails done, manicure, if that's what it calls, manicure and pedicure, whatever that costs. But I'm not actually using this money anymore. my labor, from my salary here, is coming from an asset. So it's like, okay, I want to do this, but I don't want to have to work more hours to pay for it. That's what this whole brainstorming is for 2024. When you figure this out, you become an asset to a future husband. When you think in this spectrum, and if he doesn't think in this, you become a queen of your lineage who rules well. I hope you would consider thinking this way in brainstorming and asking yourself some critical questions like, what do I need to do so that I can make sure that I'm increasing my asset column at the same time I'm increasing my future retirement. I'm dealing also with my current assets, and I'm also improving my current income. You guys have a great week. I'll see you on Wednesday when we talk to men about what you can do, and we'll do a brainstorm again for men. Looking forward to talking to you guys. Have a wonderful day. Don't forget to like, subscribe, and if you never liked or subscribe as well, make sure you do that. We do appreciate the respect and love that you guys give us as we take the time to produce content that you can always enjoy. Have a great rest of your day.